What's up, guys? It's Dan from Coin Bureau Trading. Today, we're going to talk about why this week could be a big week for the crypto market. If this is the kind of content that you enjoy, then be sure to smash that like button, subscribe to the channel, and ping that notification bell. Before we get started, do keep in mind that nothing in this video is financial advice. It's just my personal analysis of the crypto market. Your analysis could be different, and if it is, that's awesome, because the more difference of opinion that we have, the better traders and the better investors we're all going to become. So I just want to start off, guys, by looking at the CME for Bitcoin futures. Some of you guys might have noticed that we actually have a CME gap to the upside for once, which means that Bitcoin's price is likely to rally in the next few hours here. It's possible that the CME gap has been closed by the time you see this video. In case you're wondering, the level for the CME gap is somewhere around 90,325, something like that. That CME gap almost got filled a few hours ago, but it wasn't quite filled, so it looks like that's going to still need to happen. So that's kind of good news that, I'm sure everyone yesterday was freaking out. And it's actually funny. I had mentioned to Coin Bureau Club members that, if Bitcoin falls down, let's say to 87K, then we would quickly see a rebound because we do need to see that CME gap be closed. A lot of people don't understand that CME gaps apply in both ways. So, you shouldn't trust a weekend pump, but you also shouldn't trust a weekend dump, because it creates a CME gap which needs to be closed. And that results in Bitcoin or Ethereum or Solana, other cryptos that are traded on the CME. It results in their prices basically rallying up either late Sunday or sometime into Monday. Of course, that brings us to the Bitcoin chart here. As you guys can see, the Bitcoin's price action has been basically forming a wedge here over the last, well, let's say almost a month now. You can see that prices have been consolidating, and kind of, that volatility, let's say, is starting to be compressed, where we're kind of chopping in a narrower range. And that suggests that we're going to see either a breakout or a breakdown. Of course, as you guys know, what I expect is a breakout in the next, basically in the next week or so, in the next couple of weeks. But it's possible, guys, that the next couple of days could be a little bit choppy, and that's because of the economic data that we're going to be getting, specifically tomorrow as it relates to unemployment. I mean, there's a whole bunch of economic data coming out tomorrow, but the unemployment rate is the main one to watch. Of course, that's because the Fed watches unemployment. So if unemployment goes higher, then of course that means that there's a higher chance that the Fed will be cutting rates. As you can see, the current consensus forecast is that unemployment will rise to 4.5% in November compared to 4.4% in October. And you can see here pretty clearly that since the summer, U.S. unemployment has been rising gradually. For this to kind of be a bullish catalyst, you need to see, ideally you would see unemployment come in even higher than expected, which of course, again, investors are already kind of pricing in a higher unemployment rate. And not only that, guys, but you might know that going into the holidays, it's common for companies to hire because they're, in the holiday season, a lot of people are spending, like throughout November and December especially. So it's possible that the unemployment rate could actually come in a little bit lower than expected, either at 4.4% or possibly even at 4.3, although it would probably be, I would suspect it's somewhere around 4.4. But the point being is that this unemployment rate that comes out tomorrow could be a little bit mixed, and the result could be that we see another day or two of chop here until we get to Thursday, which is when I think most of the excitement is going to happen, because that's when we're going to start getting the inflation prints. And of course, I'll be doing a video about that on Thursday, just to give you guys a sense of what to expect. Spoiler alert, I do think inflation is going to come in lower than expected, and the very simple reason being that investors are pricing in a higher inflation rate, but oil prices fell in November, and also rental prices continue to fall in the U.S. Ever since the crackdown on migration, both legal and illegal these days from the Trump administration. Of course, that pushes down basically rental costs. So long story short is that, again, in the next couple of days here, we're probably going to get a little bit of chop. We might get, let's say, for example, today will be a green day, then tomorrow we get another red day, and then maybe Wednesday will be, again, just like another chop. But then going into Thursday, I think that's when we're going to really start to see some more momentum, because we're moving into that seasonal period, that Santa rally period. And so that's when we should start to see things pick up, especially if the CPI comes in lower than expected, which again, I think is very likely, because CPI expectations are actually for a higher inflation print, which means that the chances of a downside surprise, in my view, are higher. Whereas here, investors for unemployment, they're already pricing in a higher unemployment rate. So for this to be bullish, you would really need to see the unemployment rate go even higher than what's being priced in now, which is not likely because of the seasonal hiring. Hope that makes sense. But anyways, the main thing to watch, in my opinion, guys, in the next couple of days is how these macro prints, whether it's the unemployment rate or PMI or all these different things, watch very closely what's happening with the US dollar. Simple reason being, guys, and I've explained this many times before, but I'll explain it again. If you look historically speaking, when the US dollar begins a medium-term downtrend, you basically have a crypto rally led by Bitcoin, then you have a few months of chop, and then you have a second leg lower and an altcoin season. And that's kind of what we've been waiting for here, basically since July, since we almost saw that second leg lower starting in June, July. We almost saw it starting in September, but of course we got a big bounce in October, November in the US dollar. And this is precisely why the crypto market was basically being weighed down, because when the US dollar rises, that basically drains global liquidity. Very simple way of understanding that. As you guys can see, level I believe I had outlined last week is that we want to see on the weekly chart, we want to see the US dollar have a nice big like red candle close below the Bollinger Band moving average on the weekly, and it looks like that's something that could happen this week again, especially if we do get higher unemployment, or maybe just some more deterioration around other economic data, and also if inflation comes in lower, then we will be getting a nice big red candle in the US dollar. That doesn't mean that that crypto is going to rally instantly the moment that happens, although if it's as a result of of these economic prints, then yes, we could see crypto reacting right away. But again, the key takeaway, we want to see a big red close here on the US dollar going into the end of the week, and that would set the stage very nicely for a massive rally going, I think, into the end of the month, where we could see some pretty sizable bounces. Because again, from a purely technical perspective, guys, everyone forgets, even if we are entering a bear market, we do need to see Bitcoin rally back up to this Bollinger Band moving average here, which is currently around 106,000. Bitcoin would need to rally up to this level regardless, just from a purely technical perspective, before rolling over and entering the bear market. The alternative scenario, which would be a scary one, is if Bitcoin just kept chopping here, let's say for another, month or another 3 weeks. What's really interesting and what caught my eyes is you can see that Ethereum has been holding the Bollinger Band moving average on the daily quite nicely here over the last few days. That's looking really nice. Looks like we're going to have a bullish candle close today as well, which means that we could see a retest of this upper level here around 3,400 by the end of the week, especially again if we do get some positive economic data. I would expect to see Ethereum outperform here, especially that you can see here on the daily that Ethereum is starting to, ETH BTC is starting to rally again. Ethereum is starting to gain strength against Bitcoin over the last few days, and this is something that will be amplified if we get weaker economic data, which results in a weaker US dollar, which tends to be supportive of liquidity, which is of course very supportive of liquidity in altcoins, let's say. And of course, when it comes to getting a sense of like where the crypto market's headed next, all we have to think is, okay, Bitcoin is leading, then Ethereum, follows, and then everything else comes afterwards in terms of liquidity flows. And it's just been really interesting, again, that in the last, let's say, couple of days here, or I guess last couple of weeks, Ethereum was kind of chopping against Bitcoin, but then let's say since the start of this month, we've started to see significant strength in Ethereum versus Bitcoin, and this is kind of like the main thing that's made me very bullish on December as a month. And you can refer to my video about why December is looking good for crypto for more info there. But yeah, one of the main things I've been watching is first seeing ETH BTC rallying since the start of December, and of course seeing the US dollar drop sharply, lose a key support level since the start of December, and continuing to fall. We want to see that continue. We want to see the US dollar continue to fall. We want to see ETH BTC continue to rise, because eventually, historically speaking, that will result in that second leg lower in the DXY into altcoin season. And as Ethereum starts gaining ground, you get more and more capital rotating into altcoins. Anyways, guys, if you are going to be trading this week, again, I'll just reiterate that the next few days will probably be choppy, but going into later this week, I think we're going to see lots of action. So make sure you're prepared. Check out the first link in the description here, BitGet up to 50,000 USDT deposit bonus. Click on that link. It'll take you to a page that looks like this. You'll notice that yes, the Coin Bureau does have a partnership with BitGet, but on a personal note, I think BitGet is an awesome exchange. It's one that I use personally. That does not mean that you should be keeping your crypto on an exchange, whether it's BitGet or any other exchange. Always keep your crypto in your personal wallet. Only have crypto on exchange that you're actually actively trading. But with that being said, guys, it's completely free to sign up to BitGet. They have spot trading, they have futures, they have on-chain trading, they have tokenized stocks, they have AI trading, they have all these different awesome features. And again, completely free to sign up. So just make an account, see if you like it, play around a little bit, and with some luck, you'll have enough trading volume to get some of these bonuses here, which again are up to 50,000 USDT. And if you guys did make it this far and you did find that information helpful, then be sure to smash that like button, subscribe to the channel, ping that notification bell, and I'll see you in the next one.